live, beautiful people. How you doing? We back in the city. We back in the city. What's up, family? How y'all doing? Look at my vibe right now. Stop playing with me. Stop playing with me. What up, Brody? What up, baby? Supreme Rising, beautiful people. What's up, Elizabeth Salgado? What up, Patrice? What up, John? What up, Samantha? What up, Laureen? What's happening? Caroline? What's happening, beautiful? Cassie, how you doing? I'm in my saxophone mood this morning. We got 2 days before Thanksgiving. I'm gonna conjure up the most dominant fat ass energy I can conjure up to eat banana pudding, smoked turkey, dressing, mac and cheese with Velveeta. Yeah, that's how we doing it. Dalbert the dog, what up, baby? What up? What up? Hey. Trina, I see you, Supreme Rising. I am back. I'm back in the city. I'm excited. It is Tuesday, November the 25th, 2025. So on your calendar, you're going to see 11/25/25. Let's go. Let me rock out these little 2-3 minutes of this intro. Let me rock out. Make sure you tap the screen. Make sure you literally like the live. Click the thumbs up. If you have not subscribed, you have not told somebody to subscribe, you tripping. What up, Steph? What up, Ring? What up, Ring? Hey, my boy Key. What's happening? Oh, I forgot we got the new bill. We got the new recipe. Keep laid down the new recipe. You're right. You might be right. You might be right. We bought some new cheese yesterday. By the way, gold went crazy. Gold went crazy. So let's get into this. Today's class is called Market Psychology and Price Action. I'm going to show you live, like right here, right now, from last Wednesday when I was on live with you guys, giving you guys an analysis on what is a dominant floor, meaning your support, what's a dominant ceiling, which is the roof, which would be your resistance, and how to start understanding price action. And when you start understanding market psychology, you're going to start understanding why you should be buying in these bottom positions, holding these positions until it gets to those top positions, and letting the market literally go out from there. You understand that? So watch this as I transition into some frequency. We're going to have some frequency in the background today. Let's do frequency in the background today. I might need some Cuban music, to be honest with y'all. I might need some Cuban jazz while y'all playing. I might need some Cuban jazz.
Imagine if we could tell
Yo, Limo, you be jumping on my lives, man. You might need to give me some money. We might need this in the background. That mafia music. I like it. So let's look at the market. If you are brand new, I want you to, as Bruce Lee would say, empty out your mind. empty your mind and be like water. Water in a cup becomes a cup. Water in a bowl becomes a bowl. Water in the financial markets becomes the financial markets. Watch how last week when we started projecting that the market was literally up here, sitting in the middle of these zones, this is the overbought area and this is the oversold area, which in hindsight, last Wednesday, this was the daily highs and the daily lows. So let's go back to the 4 hour. Today is Tuesday. So you had a full Sunday and Monday of the market's movement. And I want you to see how strong the psychology behind price action 4,048 to 4,044 when my zone was 4,048, 4,051. Watch this, beautiful people. So when we started projecting that the market would literally shoot down into our buy zone, this is the action, because this, when I was basically saying this is what happened since then. Look, this is Wednesday. So let's go from Wednesday to today. Remember I told you guys there's a 200 pip gap down here because the EMA 200 is down here? So there's a possibility that the market could just drop to the 200, slingshot back up, right back into action. Oh, Cuban, you might be doing too much right now. La Havana, slow down. Despacio, mommy. Despacio. Slow down. La Havana. We trying to learn right now. That's more like it. That's more like it. You understand that? So watch this, beautiful people. When the market was here, I want you guys to understand. Let me get me a different arrow so you guys can understand. When the market was sitting right here, she dropped. Every candle, watch this. I BS you not. No matter how far the candle went down from this price action right here where we have action, it always closed right back above 4,048. Put some H's in the chat if you understand that. The market came down here, pushed right back up here, closed here. Came all the way down here, pushed right back up here, closed here. Came directly to our actual aggressive and just jumped off from 51 to 94. Came all the way back down, hit the modest, touched 44. Touched 44. Actually, no, is that 44? That's not 44. Yeah, it touched 44. Bounced all the way back to 64, 200 pips. Open, went all the way up, came all the way down again. Look at the market. Look at the market. Touched the zone again, closed right here. Came to 44. Actually came to 38. That's 30. Actually, that's 40. Came to 40. Closed at 40.58. Came back down again. Touched right here. This little candle right there. Touched right there. That is 40.41. Closed right here. And then the ultimate candle. Let's talk about this candle here. Let's talk about this candle here that shot down to the EMA 200. And these are 4-hour candles. So within 4 hours, she came and she closed right back into the zone. Following candle, open up, came right back down, got the rest of the people's stop losses who were in buys from down here. Close, look at the shot up. Boom, boom, come right back down again. Closed under. Next candle, pulls up, closed down, fake out. People start selling. Boom, shoots back up. Now, put some fire in the chat if you understand what I just showed you. The battle between buyers and sellers in the foreign exchange market on gold since last Wednesday. So meaning you had two areas that were dominant. The 200 and our actual zone that we got from last Wednesday. And when she finally took off, she gave you 3 consecutive higher highs. Notice, in this structure, because there's so much selling pressure and buying pressure in the same place, it made the market go sideways. So in that trade, if you were only scalping 60 to 80 pips, 30 to 50 pips, you were always making money from here. You understand that? That's like twerking. Buy out, buy out, buy out, buy out. Put your back into it right here. You understand that? Put some fire in the chat if y'all understand that. That's like, let your elbow touch your knees. Let your knees touch your elbows. Like, let's go. Like, that's buy out, right back up. Drop it down, 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 right back up. And look at that. The minute you saw, let me show you. You see this sideways movement right here? Let me show you the trigger that let me know that it was finna go. Watch this. Sideways movement started from here. Look at that. Watch this. We're gonna cap it right here. Boop. And these are all like fake zones, so we're gonna put about right here. Yes. Because these are all fake outs. These are all fake outs right there. Let me get it to a place where y'all can see it, so everybody can see it. Y'all see that? These are all fake outs. How the market just went up but came right back down. Went up, came right back down. Went up, came right back down. Went up, came right back down. Y'all see that? Look at where the market took off right here. It literally opened up over here, closed right on top of the market. New candle open, went right down, hit the trend, and took off. People say, where you see the trend? Here's the trend. Right here. Because it's an uptrend, you turn it green. So I go, yo, not only is it respecting the resistance, the support area, the floor, or 4,048, but it has the potential to take off from here. You have to start being able to see this. So this is the reason why I do these classes. So you can start understanding, like, not only are we giving you fire ass zones, but we're giving you plays that play out for the week that creates market structure that most people are literally like paying courses for. What do you say, Stephanie? So when you have the 200 under your zones, is the potential your stop loss? Absolutely not. Absolutely not. That's going to be probably like my last entry. When I see a 200 next to one of my zones, and I'm like, I cannot just disrespect the way I trade, so I have to stay and trade the gap. So when my zones get blown through, 9 out of 10 is because there's a 200 somewhere near the zone. That's why it goes and grabs it, and then it shoots back into the zone. So that lets me know, Stephanie, that not only is the zone still valuable, but I'm probably going to be in a drawdown. So what I'm going to do is make sure that I basically make sure my first entry is not going to hurt my account if it does go to the 200, because I'm never in the trade seeing this trade like something like this right here, buying right here and not recognizing that the EMA 200 is right here. So when I start buying right here and I want to put a standard, I'm only putting 0.25. I'm only putting 0.25. So when it does finally come down here, I'm hitting it with the 75 from here. And then the minute it gets back into my zone and she starts pulling up, I close the 0.25 or just put her at break even and just let her run the trend at this point. And then when I see her close all right here at the top of the channel, retest back into the channel, and then produce literally a candle from 4,089 all the way up to 4,139. It was produced for once it broke out of this channel here, this sideways confused ass movement. That's why Alex started telling y'all gold is going to go to 200. Gold is going to go to 200. But guess what gold has to do? Before it goes to 200, guess what it needed to do? It needed to come up over here. Look. I want you to see it. I want you to see it. I want you to learn how to see it on how I see it. Look. I'm going to remove the zones. I'm going to remove everything because this is a fire ass zone. Just let y'all know the sell zone. Look at the sell zone from last week. It literally hit the tip right here and dropped all the way down. And it hit yesterday. And let me show you why and how I knew it was going to hit and why would I take the chance when there's so much bullish momentum. Watch this. Because previously the history always likes to repeat itself. So previously, what did gold do from this zone right here? Type it in the chat. She dropped. Not only did she drop, but that's a massive drop. That's like institutional drop. That is like market manipulation drop. That is like somebody got some news and somebody tanked the market. You see that? And then it got confused and then she started going back up. So I said, yo, whatever price action that happened here, whatever deals that was made here at this literally level of resistance here, I bank that there's going to be still enough people that didn't get into the deal the first time and they're going to manipulate it again the second time right here. But guess what? It ain't the second time. So I want you guys to watch this. I'm going to delete everything on the chart and I'm going to show you why this little area right here was so valuable and the reason why you should have just took it. Boom. That's the actual area. Watch this. Boom. It had to break this area. You see? It had to break this area right here. Boom. That's the history. That's your history right there. So imagine this was yesterday. This is November the 11th. She gave us that big drop. Boom. Okay? Let's go again. Look at this. Here it is again. Look at the drop from here. Look at the drop from here. October the 23rd. Look at the drop from October the 23rd. Look at the drop from October the 23rd. Put some fire in the chat if literally light bulbs are coming on right now. Do you understand the words that are coming out of my mouth right now? You understand that? How many times do I need an area to hit before it's valuable? We need at least 3 times. Look. 1. 2. 1, 2, 3, 4, 5. Light bulbs should be coming on. Now you start saying, yo, what is happening right now? I go, yo, on the 4 hour, gold is trying to complete a W formation. It's trying to make the W formation. But look, boom, boom, middle of the W, back to the 200, double bottom, boom. Now it needs to break the resistance area for the middle of the W. So guess what she's doing? She came up here, she come right back down, find more buyers at what? At the support area, boom, which is the trend, and then she flies back up to complete the W. So then when you start looking at the trend line, you start saying, yo, there it is right there, boom. And if she breaks this trend today, guess what she's going to do? She's going to come all the way back down to this 200 again because she didn't have enough buyers to go back and go back up to like 42.30, 42.50 and stay there. So in order for this structure to complete this W formation, she has to go get more sellers, more buyers. More buyers are going to be here. You see? More buyers are going to be here. Why there? Because that's the last time it consolidated for a very long time, and then buyers won that battle. So they'll go back down and see if there's any buyers that they left behind to come back up to break this actual structural error right here. Do you understand the words that are coming out of my mouth? And once she breaks this structure and gets on top of this structure, she is going to continue going up to right here. Boom, like this. Bye. That's what it will look like. Put some 8s in the chat if light bulbs coming on. This is sauce. This is sauce. Yeah, previously on Dragon Ball Z. Vegeta found 500 zennies on gold. Oh, yo, Lauren, it's ridiculous. It's ridiculous. People don't want to hit the thumbs up. It's okay. It's okay. It's okay. It's okay. But now you know. So when I start telling you, it is important to understand the psychology of the market and price action together, because you're going to start understanding those zones that we give you and what does it mean in the market. And when you start understanding what does it mean, a feeling is going to come upon you of going, I see it. I see it. Put some 1s in the chat if you see it now. You understand what I'm telling you? Put some 1s in the chat if you see it. Because imagine I gave you level of support at $4,048 an ounce, which was literally right here. Boom, 4,048. Buyout. It was literally right there. Now you understand the psychology. I gave you this floor. I gave you this floor right here. And then your ceiling was 41.56, 41.59. So 59 was the roof. It went to 56, which is 30 pips into the zone. Boom, 56 is your aggressive. It hit your aggressive and just died. Bing. So look, we started the projection here. I started saying it's okay to buy here. I also said in that Wednesday's class, which was at 4 in the morning, there's a 200 down here that it showed that it has price action, but it also showed that price action came right back up into this level of support, which supported the floor price at 4,048, which is the reason why I gave it. Put some 8s in the chat if you start understanding why I'm telling you what I'm telling you and why I see what I see, which makes me choose the zones that I choose for the direction I choose them in. Because the first thing as a trader to be successful, you need to understand why we're saying there's a buy zone here, why there's a sell zone here, why this is an actual aggressive trade, why we're saying it is hella risky, but you can take it. You got to start freaking understanding that. So when Alex tell you, yo, gold is going to go to 4,200, but it needs to break the area of 41.56. Now you go, well, what does that mean? Alex just told you that gold is going to go up here, but it needs to break this area first. And I already just showed you, Mr. H just showed you in history, all the way back to October the 14th, she dropped from there. Then October the 22nd, she dropped from there. Then October the 23rd, she dropped from there. Then guess what? November the 11th, she dropped from there. Then guess what? She got right back there again yesterday. She dropped from there. Let's go right here. She big drop from there on November the 14th. It's 2 days before Thanksgiving. Guess what happens every December? Y'all don't get to telling me y'all don't remember what I tell y'all every year for the last 6 years. Guess what happens every December? Put a 2 in the chat if you don't know what it's called. Everybody's talking about Christmas. Everybody be talking about Christmas. All I need to see is 1, 2 in the chat, and I'll introduce you to something that financial like educators and people who are active in the financial market. Hey man, there it is. There it is. There it is. The Santa run. Everybody that deals with stocks, deals with digital success, digital investments, There's something that happens every December, and me being a technical analysis guy, I can watch it and see it on the charts, and I can show you time after time after time after year after year after year that it's something happens December 1st that makes the market goes berserk. So before that happens, guess what's going to happen to the market? The market is going to have to correct. And before the Santa run, year after year after year after year after year, and right before Black Friday, the market starts fucking tanking. And then you got to understand what also happens in December. It is the last day of the fiscal year, so we go into January 1st. Nobody is wanting to go into a new year with a tanking market. So every year after year after year after year, you can check after check, you can check. The market always ends in the bullish area on the last day of the year. It's like history. So I'm going, yo, let the market drop. So we're going to be shorting the market. But if the market starts hitting key areas like the trend line to complete the last leg of the W, I will reverse my position and I will go into the buyer's position because I know they're dominant. Because overall, the market is going up. Currently, the market is correcting because the Santa run is coming. People say, what is the Santa run? That is when institutions starts basically dumping money into the market because they have to basically, they need expenses. They need to dump money out of their company. So most of the time institutions, guess where they're going to start dumping money? Into cryptos, they're going to start dumping money into gold, they're going to start dumping money into like the DXY, they're going to start dumping, not the DX, like NASDAQ, Dow Jones. They got to dump their money. Nobody's trying to go to a new year with all that money on their books. You see? And I'm telling y'all, history is showing that 2026 is going to be the greatest transition of wealth where you're going to start seeing highs of all-time highs of all-time highs before the ultimate crash. Before the ultimate switcheroo, before the market's going to be so lucrative for the natural or just the average individual that the government is going to have to come in and say, yo, you guys are killing the labor board. Nobody is wanting to work anymore because Mr. Holistic and the OBG community got everybody trading and making money from home. They're going to cut your fucking cell phones off. Pardon my French for the ears and the sensitive ears in the community, but I don't know how else to express it and give it like severe. So imagine here's your psychology this week. This is your trend, and imagine we've only spent 27 minutes in class. Can I get some 100s in the chat if you already learned something right now? Do you understand the psychology? So when I just give you this whole psychology right now from just last week, last Wednesday to like Tuesday, imagine price action never closed under 4,048. You see, it never closed under there. Look, this is where the market started. So even when it came down and touched that 200 at 4,031, she closed here at 4,049. She closed right there. Then took off, came right back down, came right back up. So when you start understanding that, yo, the market just dropped and just made the last leg of the W. I always say I never really like to trade in the middle of the W. But because that is an area of support here, I'm already knowing the floor, the ball likes to bounce from the floor. Look, it likes to bounce from the floor. This was the same thing that happened. Now let's go back. Look at this. Look at this. I want you guys to go back. Watch this. I want you guys to understand the psychology of the market. Look at this. So the same thing we got happening right here. If you do not understand what I'm looking at, when you make a W, I'm going to highlight this middle area. That's the middle area. That's what makes the market go sideways, which literally gives you the middle of the W. Put an 8 in the chat if you understand. Put a 1 in the chat if you don't. Put an 8 in the chat if you understand. Put a 1 in the chat if you don't. And I'm going to show you this in a diagram over here so you can really understand what I mean. That's the first leg. That's the middle, start of the middle. Last Wednesday, this is what we had already, meaning this was already here when we started last Wednesday. Understand that. So when I start saying this is where we're going to buy from, that was me saying I believe the market is going to make a W. So I'm not going to trade in here. I'm going to give you a zone here, and we're going to patiently wait for the double bottom, and then we're going to buy up from the last leg of the W. Okay? Boom. Now, in order for the market to complete the last leg of the W, this guy right here, you see, it has to go through all of this consolidation right here that created the middle of the W, which is this right here. So you see all of that noise right there? You see all of that noise right there? So imagine this creates buying and selling motion, buying and selling motion. Buying, selling, 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 buying, selling. Buyers take off, buying confirmation, boom. Now watch this. And if you don't believe it, let me show you in the history. So let's go here. Same W. Bank right there, started there, came here. Boop, came right there to where we're saying where we're going to buy from. That's your support right there. Boom. Touchdown here. Bank. Came right here, started fighting in the middle of the W. You see the battle? Buyers and sellers started fighting right here. And it was such a fight that it made the W look ugly. It's an ugly W. So it did like this. But ultimately, it came and made the last leg of the W. Put some 100s in the chat if you see what I see right now. And when I tell you the market had to go through a battle, it had to go through the same consolidation. Look, that's right there. Consolidation, consolidation, breakthroughs, breakthroughs. You understand that? So this makes you understand the psychology on why the market is moving the way it's moving and why price is acting the way it's acting. So let me clear it all. Let me clear it all again. Boom. Look at this. If you took a buy right here, boom. You was in a buy, swing buy. Let's talk institutions. Institutions bought here. The market is moving. You know where institutions are going to have their stop loss? The market comes up here. You know where institutions are going to put their stop loss? Right there at the 200. Boom. This will be a safe stop loss for them. So they secure money. They secured money, almost 200, 300 pips. They secured it. They secured that. So that's their profits here. This is profits. Understand that. This is money. Where my money sign at? Where my money sign at? Boom. This is money here. That's money. Put some fire in the chat if you understand that. That is institution money right there. Boom. So now they have their stop loss here. So guess what the market does? The market comes up, boom, bang, comes right here, clips them out, takes that liquidity, gives them their money, takes off. Don't have enough power to break through structure here because it's already been hitting 5 times. Look at where she's stuck at. So that's why I tell you, yo, that's a good roof right there. She looks like she's going to hit her head and she's going to drop back down and go get more of her homeboys back down here at this structure. So what she do yesterday? She hit that 56, hit her head, and dropped all the way back down to 41.15. And guess what she do at 41.15? She bounced. Why does she bounce? Because that's your trend line rejection trade to start going back up to fill the last leg of the W. There it is. Here's your trend. Boom. Let me make it bigger because most people have their charts like this, and that's where you see your trend right there. All you need is 3 consecutive hits on an uptrend to make it a trend. You got 1, you got 2, you got 3. And you can count those. So you're hitting that. You got the EMA 9 right there also. You're hitting that. That's the top of structure. That's the top of structure. You're hitting that. That's for sure. You see that? Right up in here. Boom. That's your structure. That's the top of that consolidation. Remember the consolidation. It's there. Boom. That's literally retesting the top of consolidation and bankhead bouncing off of it. Bink. Now you should see bullish momentum going up. Now guess what? Here's why this is so important. We all know gold has been going up. Everybody knows gold is going up. My question to you, in the next hour and 24 minutes, if gold was to just cross and close over this trend, understand she's going to come back down to 4,031. And now I'm going to delete my charts and I'm going to mark up the charts and I'm going to show you how that price exists. Are you ready? Here we go. Let's go. So now let's talk new movements. Let's talk new money. Let's talk new positions. Let's talk top-down analysis. You have a doji candle, long-legged doji candle on the day. So that lets me know that gold is moving with consolidation. It is hella confused at the moment. That means it does not know if it wants to go up. It does not know if it wants to go down. If I look into the history, this is a very common area where the market likes to drop from. Bing, bing, you see? So it's having a hard time pushing through that area. If I make it small and I start saying like, yo, that might look like a little sideways W, it's just funky. You see, it's just funky. It's just funky looking. It's just funky looking. You see, it's just funky looking. Still a W. It just look funky. Put some ones in the chat if you see it. That's a daily chart. That's a daily chart. You can even take it here. Boom. That's a daily chart. It's just a funky looking W. But it's in the fight of what? The middle of consolidation of the W. Boom. It's in that fight. So it needs to break up out of here for you to really see it to go up. It needs to come back down, test that little trend that it's creating on the day. All of this stuff. So this is what I see already. So now I go, yo, since it does not know if it wants to go up or go down, to trade and mark zones at the top of a doji and at the bottom of a doji is all you have. Unless you're going to come back down to a larger zone, because you know that whatever decision it's going to make, it's going to break through the roof if it makes a decision to go up. It's going to break through the floor if it makes a decision to go down. That's why it's called a doji. Because whenever it makes a decision, you're going to be selling against its decision. That's why you'll be wrong. That's why they say you never trade on dojis. So watch this. Let me show you why you don't just go here and here. Let me show you. Because you're going to literally be in an aggressive trade for no reason. For no reason at all. Because what I show you, when you make this a lifestyle, day trading is a lifestyle. You see how it already went to a green doji, back to a red doji? It's like flickering like Christmas in your face. So with the top of that doji, your high of the day is $4,159 an ounce. The low of the day is $4,110 an ounce and 52 cents if you want to put it that way. You see how it's flickering like Christmas? Santa run is coming. I go to the 4 hour, check it out. Let's reset the charts. There's your gaps. Here's your gaps right here. And this is where you'll be trading. You see? This is where you'll be trading. So if the market chooses to go here, that lets me know that, yo, you might see scalping action here. But if she decides to go up, that means she decided to go up. So 9 out of 10, This would be a break, close, retest, flip zone trade. You understand that? But I'm not afraid to take a sell there because that's the way I trade. I go, yo, there's your zone right here. 41.59, 41.56. That's what she took off from. You see? That's like trading the same area. And I'm going, it already hit 5 times. It already hit 6 times in the past. You see? I start going back. I'm like, yo, this area been playing out for a minute now. You see? This area is playing out for a minute. 1, 2, 3. And it's proven to get above it. But then that M up here brought it back down up under here. You see? Look at the psychology. Now she made it back in here. She consolidated again. She broke out. Now she came right back in, broke through it, through this price area. Now she played down here all the way until she broke back in it. Now she in it again. So now what I know in this area, the market is proven to go more sideways than it goes up and down. Put some 8s in the chat if you understand this area of support and resistance right here. The market is proven to go sideways more than it goes up and it goes down. But what is also proven, whenever it makes a decision from this area, it produces a really big candle. Let me show you those big candles so you can understand. Big candle. Big candle. Big candle. You understand that? So this also lets me know that there's a lot of individuals in there trying to make a decision. So if I'm going to make a decision in this confused ass zone, this area here, I'm only going to make decisions at the bottom and at the top, not in the middle. That would save your account. When it gets in the middle, you start watching it and you go, all right, let me see what it's going to do. It's sitting in the middle. Watch how easy it is to see what it's going to do. Boom, there's your trend. Boom. So guess what? If you can't just jump into this because it's not smart, because you're going to get into the consolidation right here. It's not smart to jump into anything. You have to let it make a decision. And if it makes a decision to do this, boom, bounce, trend line rejection, boom, break the floor because it's proven to produce that candle. How you know sellers are in play? It broke the actual trend in the middle. That's why you take that sell. If it comes and closes over here in the next hour and 17 minutes and another candle opens up over here and she pushes back down on the top of structure, it is okay to take a trend line buy on this rejection to this roof over here. It's okay to do it. But then I say, that's a high risk, low reward play. Your bigger plays are going to be at the top of those zones and at the bottom of those zones. And because this is a previous zone that just hit and it dropped almost over 200 plus pips, now it's coming back up. It has more buyers. So this zone is too aggressive simply because it's at the top of a long-legged doji on the day. So what I do is, let's clear the board. I don't trap the long-legged doji. You see? I don't trap the long-legged doji. Let me get all of the alarms out of the way. I don't trap this candle. I don't get anything over here because it's over here. You have to come here. You have to come to the next dominant high. It already broke these highs. You see? It already broke these highs. Now I want to see if it's going to come to this high. And if it's going to come to this high, she's going to have to come back down here. You see? If she has enough buying power to just shoot up here, it's going to take some real investments. And that candle produced, you see, a lot of sellers. Boom, 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 boom. They sold off sideways, broke through consolidation, closed, retest consolidation, pushed back up, hit the middle once again, dropped, and now she's in that same area again, riding that trend from the daily, and she could bounce like right up in here. You see? You see that? That's like sauce 101. You have a doji, bullish confirmation, buying entry right there. That's like sauce 101. That's like sauce 101. This is Sauce 101. I'm telling you straight up. So now, where do I find my floor? I find my floor right here at the top of 4,095. You got 4,095 to 4,098. That's exactly where I will be buying from. You see that? Right up in here. Let me find it. Let me mark it up for y'all. So people say, I don't see it. I don't see it. Da, da, da. You guys to see it. Boom. Watch that. Watch this area. I want you guys to see this area. Watch this area. It's proven here. Look, bink, bink. We can go back. It's proven to give us buying action here. Look, it's proven. So now we just wait. She can start bouncing from here because that's your trend. I want to see her come like this and then get up in there. You see, like that. Watch it. Oop. Right there. So now let me give you guys education. The zone is here. The market is here on the trend. So this is where you watch the market and you start saying, hey, is she going to break that trend or she's going to come down here, get more buyers and give me a fake out and work her way back up on that trend? That's market psychology and that is price action in your face. Is she going to jump from 4,120? She probably give me 30, 40 pips. Watch it. She'll probably give you 30, 40 pips right there on the spot. Right here on the spot. Look at that. Right there on the spot. I want you to see it. So imagine the line is sitting at, the line is sitting at 41.15. She's sitting at 41.18. Just that little pull up. Look, just that little pull up right there. So you can trust a trend line rejection for a scalp. You can trust the zone for a day trade. Look, that's a scalp. That's a scalp. That's a trend line rejection scalp. That's a trend line rejection scalp. These are little things like this. Alex just posted a buy zone around there. Yeah, I'm telling you, it's like that's where it's at. This is where it's at. I'm telling you, like this is like Sauce 101, trend line rejection in your face. Wish I would have known that last night. Thought it was just going to be a little pullback. Oh hell no! You got to look at the history, Casey. You got to vet what we're telling you. You got to vet it. You have to vet it. I told you guys the exact psychology of what happened last week, why it should drop from that area, and it dropped. Just that simple. Just that simple. Look at this little boom. So 41.15, she flew to 41.22 right now. That's 70 pips to the head, like to the head. And imagine, she's still going down. I believe she's still finna push through here. This is just right, making money right now. This is like, oh, boom, let me catch this trend line rejection. Okay, boom, now I'm on US 30. I see where she at. I got the zone. I know where she going. Let me trade in the middle. So if you start trading in the middle, you have to start scalping. Meaning when I'm in profits, I'm taking partials, moving stop loss break even because I'm minimizing my losses because I'm trading in the middle. And then if it comes back down and I like it, I lower my risk and I jump in again. Each time I take this trend line rejection, I lower my risk. I lower my risk. I lower my risk. So my profits are smaller, but also my risk is less. That's the psychology and how you trade price action live in the markets on gold with the psychology of where it's at, where it's been, and where it's going. You understand that? Like that's Sauce 101. So let's go find some money. I'll come back to gold. I'll come back to gold. Let's go find some money. People like, damn, you gonna give some zones or what, bro? You gonna give me a zone or what? 248. 248. Yeah, let's go 248. Do I want to go under? Let's do 228. Let's do a 200 pip zone. Sell nice. I think we got a lot of news today too. I think we got a lot of news today, so y'all be careful too. Yeah, we got a lot of news today. Oh, hell yeah. Oh, hell yeah. Be hella careful. Yeah, be hella careful. But that's a scalp area right here. There's the zone. Right there. What we're saying is that NASDAQ will keep this trend. Look at that. It will keep this trend. Bounce. Bounce. Top of structure, reject. Put some fire in the chat if you understand that, why I gave you that area now. Top of structure, reject. Do I need to keep going? Do I need to keep going? Christina, you see this? This is for you and my guy over there. This is how you trade without anxiety. This is how you trade it without anxiety. Somebody type in the chat, how many times do you need an area to be hit for you to trust it, to put your money there, to take a short position or a long position? Somebody type that number in the chat for the new people. How many times does an area needs to hit? How many times does a market needs to hit an area for you to say it's worthy enough for me to put a lot size there or actual like a micro lot there, any type of leverage there, and take that trade? How many times do you need it to hit an area? Please type that in the chat for someone. 3. You need 3 solid touches at a price where market makes a decision and chooses to go down or go up. And if it goes down in that same price action, 1 time, watch it. 2 times, note it. 3 times, put your money there the 4th time. Put your money there the 5th time. Put your money there the 6th time. Put your money there every time it hits and it does not break through. Where are we at right now? 1 time, 2 times, 3 times, 4 times, 5 times, 6 times. Mr. H says, hit that bitch 7 times, buddy. Oh my goodness. If the market comes and makes this movement from this trend, boom, boom, retest, boom, Stop playing with me. Stop playing with me, gang. Stop playing with me. Stop playing with me. Stop playing with me. I'm talking overall. Check it out. You're talking overall. If you didn't see me draw it, you wouldn't know I did it. If you didn't see me draw it, you wouldn't have known I did it. And people start saying, yo, that boy good. Yo, Mag, that boy good. That boy good. That boy good. That boy good. Green, green. You understand? Green, green. By the way, gold took off from that trend. Look, that heifer took off from that trend. She took off. Look. Look at that little trend line rejection. Look at that trend line rejection. But she came down, pierced it. Look at that trend line rejection right there. Look at the trend line rejection. So I go, yo, did I trade it? No, I see it. I see it. And I go, yo, she's trying to respect that trend. So imagine here in another 4 minutes, if this hour candle closes up here and the next candle comes and touch that trend, guess what you do? It's a high risk, low reward play, but it's worth the risk if you got small money in your account and you're literally trying to shoot for $6, $8, go for 20, 30 pips with a 0.02 and get you $6, $8 to go into open bail and use that leverage on a US 30 scalp or a NASDAQ scalp. Damn, that boy good. You understand? And if you don't have, or you're not, if you're busy, you can't focus, there's no need for you to be trading in the middle. You wait for the area that it normally commons go to and bounces from. And you take a zone trade versus trading in the middle. Trade from zone to zone. Therefore, there will be zero anxiety there. You're taking a risk at every major decision area. And it's either going to break through it or it's going to reject from it. Deal with the consequences. And if you do it 10 times, I guarantee you're going to be right probably 8 of them. But if you do not know how to manage, you're going to lose more than you win, and you're going to win more, but yet your losses are going to be more. So you're still not going to even go, your account's still not going to grow. And that's what happens to 90% of you guys. Your account always stays kind of like in the same little area. You go up, you go down, you go up, you go down, you go up, you go up, you go right back down on some silly shit, back up again, right back down on some silly shit. And then when you look at it and you start bringing it back, you start saying, yo, bro, what the fuck? I just blew my account here? I just blew my account right here? Like, what the fuck? All I had to do is just wait. All I had to do is just be patient. All I had to do is be patient. So here it goes again. So imagine if I gave you 4,095 to 4,098, that's the top of structure. You also have an EMA 200 sitting at 4,086. So that lets me know if I start buying right here, there's a potential drawdown to here. So when I hit this area, the risk has increased because the 200 is so close. So I'm like, I don't not take this area because it still can just take off from here. What I do is I lower my risk. And so therefore, if I have to go into the drawdown, my account can handle the drawdown from here to here to take the bounce. To take the slingshot. Question, I keep trying to suggest to another creator to use fair value gaps and order blocks, and they don't even mention it. Seems good to have regardless of trade, then settings, put, and calls. You're correct. You're 100% correct. But fair value gaps, order blocks, to a new person is like me speaking like Charlie Brown's teacher. If I got on here and I understand fair value gaps and I understand all the technical languages, like I understand all of them. So imagine me speaking that on a live stream at 4 in the morning is like wah 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 wah. That's what it would sound like. So what I get on here and I go, yo, y'all see that gap right there in the market? That's where buyers are at. Not only that's where buyers are at, that's where other people's stop losses is at. So that's where money is at. So if you want to take a trade and you don't know how to trade, just put your money there, because that's where most of the money and the decisions are going to be made in that particular area, which is right here. It has the potential to go right here. Why? Because that is the top of structure. But she's respecting. Look, she closed. She closed above the trend, under the EMA9. The EMA9 acts as a trampoline. The market pushes up on it. Watch it, beautiful people. There's a little structure here. Watch it. You're not trading this, but I want you to see how the market moves. Watch this. Boom. We'll put a little red line right there. Bang. And I know that sellers like to come in right up in this area and start dragging the market down. So you'll start seeing a wick right here. Watch it. Watch it. There she goes. There she goes. Look. Look. There it is. Bam. Bam. There she goes. There she blows. So that's how, there she goes. That's how I know if I'm scalping, that's where I'm taking my money, or I'm putting my stop loss in profits, because I don't want to risk losing a trade that I'm winning. People say, well, damn, how did you know that, Mr. H? Because that's the bottom of a literally previous structure. Look, it has to break into all of this. With that little bitty candle, no way it's going to do it. So it's going to come back to the trend, find more buyers, because buyers are proven to be at this trend. There she goes. Stop playing with me, gang. Stop playing. Oh, it's 5 o'clock already? Damn. I think knowledge is way more than zones right now. Knowledge is way more than zone. But I hope y'all loved it. I hope y'all loved this class, because I gave y'all sauce of sauces. I gave you sauces of sauces. And when you start understanding my language, you can trade as I'm showing you this. Because there's people who have been listening to me for 4 or 5 years. They press the button on those buys. They press the button on those buys because they understand what they see. My account is up 22% in 3 days using what I have learned here. You see? I'm telling y'all, it works. It works. I'm teaching you how to fish in the foreign exchange market, and all you have to do is come out there and participate. Now, if you're willing to learn and earn, all you got to do is get in my DMs and say, yo, Mr. H, how do I get on your squad? How do I get on your organization? How do I get into your team? How do I start day trading? What is the first steps? What do I need to do? And that's the key. And look at that little drop. Look at that little drop. 20 pip drop like it's nothing. Boom! 20 pip drop like it's nothing. Like it's nothing. That's your $2, your $40, your $200. Whatever risk you want to take at that area. You see? Just know it's a high risk, low reward play. So it has to be quick, in and out. You can't believe that it's going to go from here all the way down here. You don't care. You care about the 20, 30 pips that is going to for sure produce to break through an area. This is how you know when to scalp, when not to scalp. It's breaking an area, retesting an area, so you're going to day trade it. It's at a weekly trend, so you're going to swing it, you see? Bitcoin is dropping all the way down to literally like 87,000. If I see Bitcoin go to a lower price, look at this on a higher time frame. If I see her go to a lower price to this 200, if she comes to this 200 down here at 66, sell your mama. Sell your mama, I'm telling you. Why? Because it's a previous structure area. You see? I gotta go though. I gotta go. I hope y'all learned today. I hope y'all learned today. You see? You see why I would do it? You see why I would do it? Look. Don't tell me I didn't tell y'all. Don't tell me I didn't tell y'all. Don't tell me I didn't tell you. How many times you need an area to hit? 3. How many times we got? 1, 2, 3. Stop watching. Start participating. I love you guys. Stop watching. Start participating. I love you guys. Understand that. Like, share, drop your comments. Make sure you drop your comment on this particular video. What you learned today. Stop hating. Stop hating. I'm telling y'all. I'm teaching you what I know. And what I know is a for sure thing because I'm doing it consistent with discipline to let everybody know that you can learn this skill. Quit chasing the freaking money. Learn the skill. The skill will give you the money that you're chasing. Chase this skill set. Chase this knowledge. Chase this vision that you can see what I'm seeing so you can start making what we making. That's the truth. Quit trading candles. Quit trying to hit licks. Quit gambling and start trading structure of the market. And when you start trading the structure of the market, you're going to start seeing where it's at. You're going to see where it's been, and you're going to start knowing where it's going. And when you start knowing where it's going, you're going to find a proper position to position you and your freaking family. And y'all going to level up together. But until your family get it, you leveling up with us. And if you ain't got nobody on your side that is willing to do what you're willing to do to break those changes, then you need to have your ass over here with us. It's just that simple. And it ain't free. It ain't free. I love y'all. God bless y'all. Jump into my DMs and say, yo, Miss H, I was in your class. I would like to get more information. I would like to learn. I would like to start day trading. I would like to get started. I would give you my phone number, which ends in 4243, starts with 702, because I live in Las Vegas. Live on the West Coast, operate East Coast hours. There it is. Monday, 8 o'clock, 5 o'clock Western. Tuesday, Wednesday, 4 a.m. Pacific, 7 a.m. Eastern. Get that money before everybody wakes up. I love y'all. I love y'all. Like, share, drop y'all comments. Make sure you subscribe. Make sure you go tell somebody to subscribe who is literally trying to learn this day trading. Simple as that. And y'all could have gave me way more likes today. Deuces.